and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me today is Harsh. And today we're going to be taking you through all that's happening in the banking space because that's the topic for our Buy Now, Sell Now lens. And viewers, this is the show, you know, that where you get all your stock-related queries answered by the experts. In a short while from now, we'll connect with our experts and Kunal Bothra will be joining us live onto the technical front, and we'll also be joined by Mr. A.K. Prabhakar. But before that, let's have a look at what the markets are up to, because today, after a bit of a muted session in the start, we are drifting lower. Onto your screens. You will see the Nifty Bank is actually down around 12 points, as well as if we talk about Bank Nifty, that is also seen to be drifting lower with 125 points of cut. Other than that, from the auto space, Hero MotoCorp is seen to be buzzing. Once again, that stock is up more than 1.5% in trade today. That's a 2.5% uptick is what you are seeing, while Eicher Motors continues to be a flattish performing stock for today. But other than that, a lot of action is there in the banking space because you have the larger banks from the likes of HDFC Bank as that is seen to be drifting lower, and that's maybe what is creating the pressure on the Bank Nifty index. But apart from that, you have some of the other banks from the likes of ICICI Bank, as well as if we talk about IndusInd Bank, that are seen to be roaring up and high. So that's what the picture is, sort of a mix, because a couple of large banks supporting the index, but the heavyweights are declining in trade. So let's go across to my colleague Harsh to understand how are the Q1 updates and why we are seeing such a reaction. Over to you, Harsh.
Well, yes, absolutely, Srishti. So, I'm going to try and break down as to what the Q1 updates are actually looking like. And, you have the likes of an HDFC Bank, which gave a decently strong Q1 update, but not as good as one would really expect from an HDFC Bank. The expectation now has become that the combined bank will grow at 18%, but actually advances growth have come slightly shy, or rather well shy. 13% growth is the advances number in terms of what HDFC has done on a consolidated basis. HDFC Bank's assets combined. Let's also look at something like the likes of an IndusInd Bank, 4% odd. Federal Bank really stood out for me, 5+% on a sequential basis is what Federal Bank grew at. IndusInd Bank 4% on a sequential basis, just to clarify there. We saw the likes of a CSB Bank also grow quite sharply, 2.5% on a sequential basis. RBL grew well, 4% as well. So there doesn't seem to be much of a problem on the growth side, except Bandhan Bank. That's been a bit of a dampener in terms of the growth, down around 5.5% on a sequential basis, the Bandhan Bank book. In terms of deposits, though, it's a bit of a weak quarter, and that seems to continue, except select names. You have the likes of an IndusInd, a Federal. You have the likes also of a Bank of Maharashtra and a South Indian Bank doing relatively well on a sequential basis. You're seeing good growth numbers coming in from them, even on the deposit side. Federal still lacking in terms of, or rather the deposit growth is trailing advances growth. So that's one piece of IndusInd Bank, I stand corrected, that one must continue to look at. But among the laggards with regard to deposit growth, you have the likes of a CSB and AU Small, even an RBL Bank growing just 1% sequentially, a Bandhan Bank just 0.5%. So those are largely the trends that are playing out. Deposit growth overall still trailing advances growth, and advances growth looking quite robust. That's broadly the situation, Srishti.
Okay, thank you so much for highlighting which all counters are at play and what kind of a trend that we are picking up. But let's talk to our experts and understand amongst the space which are some of their top recommendations and how they see the trend panning out to be. Onto the fundamental side, let me welcome on board Kunal Bothra, as well as onto the technical side, let me welcome on board Kunal Bothra, and to the fundamental side, we are being joined by Mr. A.K. Prabhakar. Hi, very good morning to both of you, and thank you so much for your time. Kunal, firstly coming to you, because from the large cap space, like Harsh also highlighted, and today we are seeing a lot of action. Heavyweights like HDFC Bank putting some pressure, IndusInd Bank, RBL Bank supporting the index. How do you see it? And amongst the space, which are some of your top bets right now?
Good morning, Srishti, Harsh, and Prabhakar, as well as everyone. My sense is that now the banking stocks is maturing into a different phase of a price texture, because what was earlier happening is that you had the mid-cap or the tier 2 private sector banking names which are leading the charge from the front. Now the PSU banking stocks have started to show signs of aggression as well as momentum. The stock which I would particularly highlight would be Bank of Baroda. The stock has broken past about 180, 185, which has been a huge resistance for Bank of Baroda since the last, I think 6 or 8 months, end of 2022 onwards. So I think that stock has made a very good comeback. It's broken past about the 200 levels, and now I would believe that this could be one of the more fresh leader stocks from the PSU banking pack. So I would now expect that the PSU banking stocks would start to outperform the private sector banking names because of the way these stocks are nimble-footed, high beta nature or slightly higher beta nature with respect to the peers. And I would believe Bank of Baroda could be a leader stock in that category. So I would expect the stock to come back to the 225 to 30 mark, which should be a substantial 8 to 10% higher from current levels as well.
Right, and let me move to AK Prabhakar. Sir, talk to us about what your sense is with regard to especially the banking pack, given that that particular pack is in focus. Right, we seem to have lost the line there on that one. But let's slip into a very short break. We'll come back to Mr. AK Prabhakar. We'll reconnect with him on the other side.
Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock-related queries. Onto the show, we have Kunal Bothra right now with us, and in a short while from now, we'll connect with Mr. AK Prabhakar as well to get his fundamental take on all your stock-related queries. Viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and you can also write to us on our ET Now social media handles of Twitter as well as Facebook pages. So let's get started. And the first question that I have, Kunal, is coming from Pradeep, and he's from Kolkata. He wants a short-term view, rather maybe six months to maybe going to next 2 years, and he wants your take on two counters. Firstly is HDFC Life, and the other one is Man Aluminium. I'm not sure whether you track the latter one, but on HDFC Life specifically, what will be your take at this point in time? Should he enter in this particular counter?
Well, I would believe to wait out for entering into HDFC Life for better entry points. Now, ideally the insurance stocks, they have this very odd tendency of going into a very low beta and a subtle uptrend. Now, we've seen that happening for these insurance stocks over the last so many years. You look at 2019, 2020, 2021. There was a phase where these stocks, they rallied up, with a average return of around 25 to 30%, but that generally gets slowed down or beaten down significantly. So it's always better that to buy these stocks when they are getting into a corrective phase. HDFC Life, for example, just about last week, the stock had corrected from 660 levels to 630 approximately. So every 5% dip, if you can add HDFC Life, that's a much better strategy rather than buying on momentum.
Right. Thank you for that, Kunal. But, we've been told that AK Prabhakar is straight up on the line, and let me quickly take it to him. So, sir, we missed your take. We were speaking about all the banking counters largely being in focus because of the advances growth, which has largely been quite solid. But deposit momentum for some banks has been strong, but for others, they've really lagged. For some, the lag is quite large when it comes to advances to deposits. So, really wanted your take on some of the banking counters. What are your views on it?
Good morning. It is a mixed take. There are few banks which have grown beyond 20%, and their deposit growth is also very strong. There are disappointment. Bandhan Bank is a very big disappointment. Even Karur Vysya Bank is a disappointment. But there are a few banks where the growth has been very good. IndusInd Bank, the growth has been 21% year on year. And even, if you take Federal Bank, the growth has been 20%. Whereas, in HDFC Bank, the growth has been 15%. So it is not even. But, we expect PSU banks to report a better results. So, but our topic will be, City Union Bank and IndusInd Bank. Valuation comfort is there in both these banks.
Right. Thank you for that. Let me quickly move on. Kunal, if I can come to you straight on the queries now. Ajay from Trivandrum has a query. He wants both a fundamental as well as a technical piece of advice on Kaya. Now, I'm not sure if Mr. Prabhakar tracks it, but if you could give us some some thoughts around it, because what he's suggesting is he had sold the stock, now has seen a major uptrend, and therefore is trying to ask you as to what to do.
Well, I think we should avoid even at current levels. Now, the trends are still looking weak for Kaya. I think if I'm not wrong, it's on the verge of breaking below its 200-day moving average, or I think it's already done it today. Weak charts, the stock has been trending lower, significantly off than its all-time high levels. The volumes have been in a disarray, if I can use that word, for Kaya, not consistent at all. So when you look at such kind of chart patterns, price, the spread of volumes, etc., it doesn't augur well on the near term as well as the long term prospects. Ideally, you should avoid such kind of names.
Okay, moving on to the next query then. Mr. Prabhakar, this question is from Suresh and he's from Dubai. He is holding 70 shares of ISJEC Heavy Engineering from a price of 235 rupees. At this point in time, should he sell these counters or hold on? And he also wants to know an advice on L&T, that whether to book profits out of ISJEC Heavy and make a switch to L&T. What will be your take on this?
So, ISEC Heavy, we don't track, but L&T, the kind of capex India is seeing, L&T will be a good play. But you have alternative play also. Now you have Cummins, you have ABB also. But L&T valuation wise, the comfort is there. So I will advise on L&T to hold on.
Right, Mr. Prabhakar. And if I can stay with you, we have Rajesh Maheshwari from Singapore. He has a question with regard to MRPL. Now the stock's up around 11.5% in trade today, but and he holds around 900 shares at an average price of 40, so a very attractive valuation that he's bought it at. So what's your recommendation on whether he should hold or exit, remain invested, or so do you believe that valuation comfort still remains at 88?
See, oil marketing companies, it is more politically sensitive. We have elections in May 2024. So people are speculating that there can be a petrol diesel cut. So if that happens, then it will be difficult, and we have a lot of state election. So oil marketing companies or refineries, I normally do not like. Valuation wise, it is very attractive. It trades at 6 times trailing P, less than 6 times. So valuation wise, there is, but it has been always at a deep discount. So it remains so. So for me, I am not a person who likes to buy something for a trading purpose. Already has made 100% return. So I think it is advisable to take 50% profit and move on. 50% you can do some speculative work on this.
Okay, moving on, and Kunal, the next question is for you. This question is from Mahesh. He's a senior citizen and has been holding 2 counters. Firstly is L&T, 100 shares he bought at a price of 1,010 rupees. And the other stock is Bata, where he has bought 50 shares at a price of 1,500. Since on Bata, not much of a gain, so should he continue to hold on? And for L&T, it's almost been a doubler for him. So what to do next?
So continue to hold on to L&T. I think the stock has a very high correlation with respect to the index trends, and we've seen L&T to have a correlation of more than 75 to 80% in best of the market times. That generally is a good sign. So if you're expecting the the indices to grow, to build their gains from where we have seen in the last 3 months, then I think L&T could be a prime candidate of a uptrend even going forward, looking at the markets as well as the direction on the upside. Bata could be a bit tricky. The stock has underperformed now in the last 2-3 months, even though it's seen some bit of recovery. But then when you try and compare this with 2021-22 highs for Bata India, the stock is significantly off its I think the previous major highs of 2,200, and the trends have been a lot more inconsistent. So I think a 15%, 10% gain for Bata India should be a good enough territory where you can look to book out profits and switch to some other large cap formidable names just like L&T.
Right. Thanks for that, Kunal. I'll stick with you. We have Guru who's planning to buy Sterling and Wilson as well as EID Parry, 2 counters there we'll try to cover. Could you talk to us about what you see on both these counters with regard to technicals?
So Sterling and Wilson I don't track, so I'll probably skip that on the short-term time frame. But then I think EID Parry is something which you can avoid at current levels. The stock has been a into a big correction, at least in the last 6-8 months from 650 levels. The stock is currently at 465, significantly below its 200 DMA as well as below its 50-day moving average. And that generally is not a good sign for a stock price that in the best of the market times that the stock is reeling under some selling pressure. So ideally, give it more time, maybe another 6 months, maybe another 1 year. If the stock shows signs of a confirmation of a breakout about 200-day moving average, that could be a time where you can look to buy the stock, even if it's costly at those levels. So I would suggest an avoid at current levels, but say in the next 6 months, if the stock happens to break past about the 200 DMA, that could be the first trigger of a buy for EID Parry.
Okay, moving on, and Mr. Prabhakar, coming to you for HDFC Life, we did take a technical check from Kunal, but Mohit is actually 200 shares from a price of 599, sitting at a profits, and what he's flagging off that considering the merger of HDFC Limited and HDFC Bank, will it be positive for HDFC Life as well, and can he hold this counter for the next 2 years? So what's your take on this one?
I don't think a merger is possible as per the regulation. So I'm not game for that. But we need to understand. We went through 200. Life insurance has not performed as a sector. So now that is behind us, and now the growth is likely to come. And insurance penetration is very low. And there are a lot of things the regulator is doing to make the penetration very high. If that happens, then HDFC Life, even ICICI Pru, all these life insurance stocks will start to benefit. No, but we need to understand that most of my client will be holding it. Even I am holding it personally. So it is a what to say, disclosure, that I hold it personally also, HDFC Life. So it is a disclosure.
Right, and I'll stick with the HDFC counters. Kunal, we have Ghosh Dada from Delhi, who's specifically putting this question to you. He's sold everything, all of his holdings in HDFC Bank, but he's asking you whether he should re-enter at these levels.
Well, the stock has not yet hit the oversold territory on the charts. Now, in the last 3 months or 2 months, the stock had twice broken past about the 1725 mark. The earlier time the stock was plagued with some sort of a news flow on the MSCI, and we've seen a correction of almost 100 points for HDFC Bank. This time around the stock hit levels of 1750 and it's come back towards 1670 mark. So maybe another 30 points, 50 points, 40 points on the downside, 16, 25, 30 mark could actually be a better zone to go for a contra bar in HDFC Bank. So it's definitely establishing a range, 1620 approximately as a major support and 1725, 50 as a major resistance. So if you can try and buy close to the support point, the risk reward as well as the strategy could be a lot more better.
Okay, moving on to the next one, and Mr. Prabhakar, coming to you for this. The question is from Methivan from Chennai, and he's holding 2 shares. Firstly is one of the recent listing, that is Tamil Nadu Mercantile Bank. He's holding the shares from a price of 415, sitting at a mild gains in this one. But the other one is at a loss. He's holding Graphite India from a price of 620 rupees now. So what to do in both of these counters, and what's your outlook?
Tamil Nadu Mercantile Bank, as the name suggests, it is mostly into one state. So now we like banks which are spread across India, so that they can grow. And South India is already in a well penetrated market when it comes to banking and NBFC. So I like Pan India Bank, so I would avoid Tamil Nadu Mercantile Bank. But I think the query was on graphite. We like graphite. No, I think this is a cyclical business, and that will do very good.
Right. Thank you so much for that, Mr. Prabhakar. But with that, it's time to slip into a very short break. We'll take more queries on the other side, so do stay tuned.
Welcome back. You're watching Buy Now, Sell Now, show where we get you answers for all your stock-related queries. And continuing the same, the next question is for you, Kunal. The question is from Rajan from Delhi, and he wants to know, can he buy Aarti Industries for short term?
Well, I think if I'm not wrong, just last week or so we had a similar query, and I mentioned to avoid Aarti Industries because the stock is going into a big corrective phase. Now, even at current levels of sub 500 levels for Aarti Industries, you look at the last 1 month, 3 months, 6 months, even the last 1 year of price performance, the stock has been dragging lower. So it's very difficult, and it's a very high risk strategy in a market where there are so many better options. Why stick with the stock which is going into a downtrend, just trying to preempt that the stock would get into a bottom formation? So I don't sense that that could be a good strategy as such, and that's why I would avoid Aarti Industries even at current levels. I think the better prospects which are still available. So if you're looking to maybe look for a short-term trade, I think Maruti, Piramal Enterprise, BHEL will be a few short-term trades which you can look to do at current levels.
Right, Kunal, let me quickly move it to Mr. Prabhakar. Mr. Prabhakar, we have Amit Vats from Jaipur who wants to understand your views on RBL Bank. He has 800 shares at 166 bucks a piece. What, in your view, is the future prospect is what he really wants to understand. Line is a problem. Let me quickly move the same question to Kunal. Kunal, of course, not on the fundamental side of things, but how do you look at RBL Bank from a technical standpoint?
I think it's an excellent chart if you ask me, because the stock has gone into a big restrictive mode. From a low of 130.32, the stock had hit 6 months back. It's now come back towards 190 mark. If I'm not wrong, it's already perched at a fresh 52-week high for itself. So the recovery has been quite stellar for RBL Bank. So I would believe at current levels, and in case if the stock happens to get into a 10% correction, because it has this tendency of being a bit more volatile as well as high beta. So, maybe in a span of 1 to 3 months, the stock may get into a 10% odd correction. So try and take that as an advantage to try and add further. But yes, you can look to start buying at current levels.
Okay, Kunal, once again coming to you because this query is on a defense name, that is Bharat Dynamics. The question is from Venkat Ramani, and he wants to know, can he buy this name maybe for a one year period, because in the recent while we have not seen you bullish on the defense counters. So what's your advice on that?
Yeah, because I believe that the best part of the trend seems to have played out. There is always a policy of or a phase of sector rotation, and what we are seeing right now is that many of these defense stocks like HAL, BEL, we've seen Cochin Shipyard, etc. These stocks have gone through a pause in the last 3-4 weeks, which I believe could probably extend for at least another couple of months, if not more. So you should not be in a hurry to try and buy these names. Yes, they have done reasonably well in the last 6 months, 1 year. But then if you're looking to time these stocks and make it as a part of your portfolio, I think you should wait for better prospects. I would believe at least a further 5% correction to 7% correction could not be ruled out into many of these defense names. So buying on dips is what I would advise for this pack overall.
Right, buying on dips is the call on that one. But let me go straight to Mr. Prabhakar. Mr. Prabhakar, RBL Bank, it's surged in trade today as well, but on the back of those numbers, of course. But it's trading at 0.8 times book. It looks fairly decently valued in an upcycle. Growth has come back well for it. How do you view it?
We don't track RBL Bank very closely. But yeah, valuation wise, it is attractive. But our preference is IndusInd Bank and City Union Bank.
Okay, that's the take on the banking names. Moving on, and the next query is for you. The question is from Ajay, and he wants to know, can he buy Kajaria Ceramics and Indian Hotels at this point in time for a short-term period?
Indian Hotels I would avoid. I think the stock has gone into a corrective mode. It could cool off further from current levels, and I think more importantly, the time-wise correction has started off for Indian Hotels. So it may not be a major price correction, but at least it could be a few weeks of further time-wise pause into Indian Hotels. So buying on dips maybe at 370, 72 could be a good level where you can look to start nibbling in, but you keep your quantity a bit more lower. Even for Kajaria Ceramics, the stock is going through a rounding top pattern, which is a very rare kind of a pattern for the stock, which indicates that it's always better to try and wait out to buy the stock on a breakout mode rather than on a dip, because such kind of rounding top patterns, they tend to last for at least 6 months to 1 year kind of a time frame. So it's better that you buy the stock only if it breaks past about the 1280, 1300 mark rather than buying on dip.
Right. Let me go straight back to Mr. Prabhakar. Mr. Prabhakar, we have Ayush here. He has a couple of queries for you. One is Chola Finance. If you have a view on it, he's making good gains on it, but he's not sure whether you should hold, sell, or add more at these levels. So your view would probably help him.
Now we are very positive on IDFC as a sector. That is the growth engine we see. So we have coverage on Chola Finance. We are very positive on the stock. We even like Shriram Finance and Emendam Finance also.
Okay, moving on, and the next query that I have is coming from Prathamesh from Mumbai, and Kunal, he wants to know about M&M Finance. He's sitting at more than 100% profit at this point in time. So for M&M Finance, should he book out profits or continue to ride on the rally?
Ideally, you should continue to ride on to the rally, but then, you know, I would sense that you are looking out for some better prospects. So I think booking out profits for M&M Finance, maybe a 50% profit may not be a bad idea at current levels. You can shift to some other sector. So like for example, right now the buzzing sector, the momentum sector is PSU banking names, and we've discussed many of the stocks in that category. PNB is something which I do find it attractive. Bank of Baroda is something which we highlighted earlier. So you can shift to this momentum sector where there could be a significant upside for the stock. But I think booking partial profits for M&M Finance would also be a good strategy.
Right, Kunal, I'll stick with you. We have Mohammed from Mangalore. He wants to understand short-term prospects of PCBL. He is holding 4,000 shares at 126 bucks a share. So wants to understand from you what he should do and what are the targets that he should look for.
See, it's been a stock which has done exceptionally well. Last 6 months or 5 months, it's recovered from 110 to now 165. A very high-paced recovery for PCBL. The volumes have just shot up or increased up higher in the last 1 or 2 months of the price trend. So, which means that the participation has been late for the stock, and such kind of names, they tend to enter into a time-wise correction. So, if you've bought at lower levels of 120, good strategy to book out profits at current levels, maybe 50% profits at current levels, and look to buy back again at a point when the volumes was significantly higher. So that could be maybe closer to 150, 145 range for PCBL.
Okay, moving on, and the next question is from Carol, and Mr. Prabhakar, she wants a view on Colgate. She has been holding these shares and now it has reached her buying price. So at this point in time, what to do next? Book out from this particular name or wait for some more time in expectation of some return?
There is a huge change in the management and the management perception also towards the market. So I think we can give some time. The stock has not performed in the last few years, but away from their traditional business of this thing hair tooth thing, they are moving away. So I think MNC companies, whenever there is a change in management and they change their product, something major can happen. So I would hold on for at least 1-2 quarters to see what is their guidelines. So then I will take a call.
Right. Let's quickly move on. We have Krish from Chennai. Specific question for you, Kunal. What he's asking is whether Oil India and Polycab, both of these at current levels are a good buy, but he's asking from a 3-year standpoint. So your views and your duration as well, if you can guide him.
So yeah, I think both the stocks are good enough to be held in a portfolio. Oil India, I think the stock has cooled off marginally from previous highs of 265 to 70 to now 245 levels. Looks attractive as a chart as well as in terms of timing. Even Polycab, I think, has done quite exceptionally well. But I would probably expect that the stock would get into at least a further correction of 150 to 200 points. So maybe a 3,500 odd or 3,400 odd levels could be a better level where you can look to start entering Polycab. But I think yes, for Oil India, the correction seems to already have happened, and I think it's a good price to enter at current levels.
Okay, Mr. Prabhakar, want your take on Aurobindo Pharma. This question is from Vidya from Singapore, and she's been holding Aurobindo Pharma since 2 years now, and her buy price was 820 rupees. So she's still at some loss in this particular name, but what to do next? Should she book out the losses at this point in time, given the recent rally in this particular counter, or hold on?
See, the last 1.5 years, many things have happened in US, where pricing power was not there. And, there was huge stocking which happened. And now the destocking also has happened. Now inventories are very low. So, this quarter could be a good quarter. But, these are good companies, but they wanted to sell few division, they want to demerge. So, if you are a patient investor, you can hold on. Otherwise, we are in a crazy bull market. Opportunities.
Guess we have lost the audio with Mr. A.K. Prabhakar. He was just highlighting that why the pharma stocks haven't done well in the recent past, but going ahead, things are seen to be changing. So let me move on to the next query then. And the next question is from a viewer. She didn't mention Maximus is the name. And Kunal, I'm taking it from you because this question is on IDFC First Bank. The stock was a newsmaker yesterday. Wants to know that whether or not he can enter for a 10-year time horizon in IDFC First Bank. So will you be that bullish on this counter?
I can't forecast for 10 years because the data itself for IDFC First Bank is just about some 8 or 9 years if I'm not wrong. But again, the chart prospects are quite attractive. The stock or this event which is playing out in terms of merger, that could probably have a short-term impact on the stock price. We saw that playing out partially yesterday. But I believe that the long-term prospects should be much better as well as attractive. So a buy and hold is what I would recommend. But again, very difficult to forecast on the next 10 years.
Right, let me quickly switch over to A.K. Prabhakar. Very difficult to forecast for 10 years is Kunal's take on IDFC First Bank. But Mr. Prabhakar, we have Kaji, who wants to understand your views on persistent systems from a longer term perspective. Is it a good time to buy and hold over the longer term?
Yeah, we are very positive on IT as a sector. Persistent is one of our pick. So it is better to hold on.
A.K. Prabhakar, the next question is from Rama Rao, and he wants to know that whether he can enter into Genus Bar as well as HPL Electric. Both of these names have been in the news on the back of new order wins, and both of these counters have shown stellar moves. So after the recent up move, do you believe that there is more scope for upside and this is the good time to enter?
We don't track this sector, but going by the order book and the kind of tie-up yesterday Genus Power has got from GIC, the Singapore government, I think something should be very good over there. But we don't track the sector, so I won't be able to comment.
Right. Let's quickly move it to Kunal. Kunal, we have Ashish from Delhi, L&T Finance. He's bought 2,000 shares at $124 a piece. What's your suggestion? Exit, hold?
If you're a short-term trader, then you can look to exit at maybe closer to 135, 140 mark. But if you're a long-term investor, then I think you can continue to hold on because I think the recent rally indicates that the stock has gone through a big shift of range. So the supports have moved up higher from 80, 85 levels for L&T Finance now 100 plus mark. So there could be a bit of a volatility in between. But I think if you're a long-term investor, you can continue to hold on.
Continue to hold on L&T Finance if you're a long-term investor. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we'll continue to take your queries. Of course, take a look at the number above and you can quickly send in your queries to us, but we have both our experts, Kunal as well as A.K. Prabhakar, who are answering these queries. So let me take it to Mr. Prabhakar. Mr. Prabhakar, we have a viewer, Rajakumar from Kochi. He wants to understand whether to buy Bector Foods at the current market price. Does it look attractive to you?
Yeah, I know valuation has gone up, but we need to understand QSR as a space has not been doing good. But this company is supplying to QSR. So they have a better edge. If it corrects, I think it is a good opportunity to buy. At current level, it is slightly expensive.
Okay, moving on, and the next question, Kunal, is actually on IDFC First itself, because the viewer is a long-term investor. The name is Shravan, and he is holding the shares from a price of 49 rupees. So at this point in time, should he continue to hold on, or can he add more at this point in time? So what's your advice on this?
You can hold on. I'm not sure whether you want to add at current levels, because the only concern or the change which has happened for charts for IDFC First Bank is the indicators are now coming below their key support levels, which means that the price should get into a further time-wise correction. And in that time-wise correction, there is always an odd possibility of the stock going into a mild price correction also. So it's better to try and take advantage of correction. The trend looks much more stronger on the monthly charts for IDFC First Bank, but it says that the short-term charts indicate that the stock may get into an odd corrective phase from here on. So buy and dips is what I would approach. Maybe in case if the stock happens to say come back towards 74, 75 mark, that could be a point where you may look to start considering to average.
Right. Let me straight take it back to Mr. Prabhakar. Mr. Prabhakar, we have Raman from Chennai, and he's requesting your advice on two stocks. One is Laurus Labs, the other is Gland Pharma. A little bit of recovery being seen there on Gland Pharma. Of course, nowhere close to those levels at which it was. But talk to us. What do you believe? What he's really asking you for is, should he switch to better quality names, or are these good enough in terms of long-term holding?
See, if you are a long-term investor, no, above 3 years, then I don't think there is any problem. It is few things have happened, which has impacted. But I think at current levels, these are very good buy. You take Gland Pharma. Now they have increased their capacity, and they have bought a company in Europe where that will start to aid their revenue in the next 1 year. It will not happen in 12 months, but after that, revenue. So same thing with Laurus Lab. So I'm not worried about somebody who's ready to hold for 3 to 5 years. But if you are looking at 1-2 years, then you have a problem. This stock might not recover that fast as you think.
Moving on, Kunal, this next query is a bit interesting, tricky, and that would be interesting to look out for your answer as well. The question is from Deepak from San Diego, and he wants to know, amongst Zomato, Union Bank and IDFC First Bank, which amongst them could touch the 100 mark level first, and when and at which counter he should go and put his money. His time horizon is for the next 2 to 3 years.
I'll take the fourth option which you have not given, that is BHEL. I think now trading at 89-90 levels approximately, that's a stock which looks attractive to me and should be a prime candidate of hitting the 100 mark. So if you are looking at that kind of a trade. But I think out of the three names which you mentioned, I would believe that possibly Union Bank could be a stock, because the PSU banking stocks have found their mojo back. We've seen in 2022 second half that the PSU banking stocks, when they garner momentum and they gather momentum, these stocks, they tend to get into a 30, 40, even a 50% rally depending on the market scenario. So I would expect that something similar could also play out for stocks like Union Bank. So I would probably pick out this stock from the three names which you've mentioned.
Right, asked for one and got two, Kunal. That's how I would put it. But let's quickly move on. We have a senior citizen querist from Kochi, and Mr. Prabhakar, this query is for you. He holds shares in IKEO, which is of course newly listed. What are your views on this one? I think he holds it at 464, he says.
I've not tracked this company. IKEO Lighting, no, I've not tracked.
Okay, so Kunal, any views that you have on IKEO Lighting for the benefit of our viewers?
No, I don't track very recently listed name.
Okay. A lot of queries we are getting on IKEO Lighting, so maybe with some other expert we'll try to get an answers on this one. But with this, viewers, let's kickstart taking all your stock related queries in the rapid fire session. And the first question that I have, Kunal, is from S. Padmavati. She has bought 1,500 shares of Mishra Dhatu Nigam at a price of 90 rupees. What to do next in this particular name?
Look to hold on with a trailing stop loss of 275 if you are a long-term investor.
Right, Kunal, I'll stick with you. We have a viewer from Chennai, Sankar, who wants to understand the entry price from you on Divis Labs.
Well, I think if the stock corrects and say comes back towards 3,500 mark, that could be a very good entry point from a short-term play.
Okay, Mr. Prabhakar, I'm not sure whether you tracked this one. The query is on Subex. Dr. Ketan Vora is holding 3,000 shares of Subex at a price of 34. His investment horizon is for 3 to 5 years.
Move on. Entry price for Asian Paints, Kunal.
Well, I think wait out for a major correction. The stock has tend to sort of peaked up. I think maybe closer to 3,000, 3,200 could be a better point.
Okay, Kunal, your take on Roto Pumps. Methi from Trichy wants to know entry price on Roto Pumps, maybe for a 1 year time horizon.
655, 670 could be a better price to buy.
Right, Kunal, I'll stick with you. We have a viewer who also wants your views on Titan. When can he buy? Is this a good price?
Well, current price is a good level. You can look to start buying Titan.
Okay, Mr. Prabhakar, what's your take on tin plate? Chandrasekhar is holding 3,000 shares at an average price of 307. Should he hold on or make a switch to any other name?
It is a wonderful business, and they make cans, aluminum cans. So it is a wonderful business. You can hold on.
Right, Kunal, your views on Thermax?
Not an attractive chart as such on the short-term time frame. I would suggest an avoid.
Okay, Kunal K. Parthasati is holding BPCL, HPCL and IOC. In BPCL, he's at 25% loss. Other two names are no return giving for him. Should he hold on or wait for some more upside?
Hold for at least another 8 to 10% upside into all of these three names.
Right, but with that, we're completely out of time on the rapid fire as well. Thank you so much, gentlemen, for your views. Thank you, Kunal. Thank you, AK Prabhakar. Once again, it's a pleasure having you here. And on behalf of all of our viewers, thank you. But with that, we're completely out of time. As I did mention, from Srishti, myself, and everyone who puts the show together, thanks so much for watching.